We're going to work on Frankie. This is a big grid here, and it looks like a lot of information, but we're just going to go through it one at a time and get it done. So here, the first thing we want to do is solve for production. And the rhythm for that is sales plus the target ending, which is based on management's policy, which gives us what we need, but we don't need to produce all of this if we already have some. So we back out the beginning inventory. So let's start. Sales for July. Let me put them all in here. All right, I've written them out there. There's sales for each of the months. Now, what is the policy for ending finished goods inventory? Remembering that the policy for materials inventory will be different. Here's the finished goods inventory policy, 10% of next month's sales. All right, here we go. 10% of next month's sales. So we add those two up, and that gives us what we need. And then what will beginning inventory? Now, did they tell us what beginning inventory was? Nope. So we have to assume that the planned beginning would be the same as the planned ending for the prior month. So if June had been here, what would planned ending be? It would be 10% of July. 38,000. So let's get the math. All right. Now, ending inventory for August. I'm going to use our rule times the 0.1, and then add those two together to get needed, and the beginning balance in August is the same as the ending in July. And then we can just use our math, and we can copy this over, but we don't go to November because we can't figure out the cell. We would need December to figure out this cell, so that whole area is grayed out. So that's our production. So they asked for production in August and September. So that would be those two cells. So we've done the first requirement. Now they want purchases. So purchases is about the materials. So we have to solve for the materials budget. So what is the material? The material is oil. All right, so how much oil do we need for production? We ignore sales. The amount of oil that we buy is not related to sales. It's related to what we produce. So if they give you sales, you have to first solve for production before you can get the materials budget. Be very alert. If they give you production, you can start right away. If they give you sales, you must first do production, then you can do the purchases budget. So there'll be some sort of multiple. How much oil do you need for each finished unit? How much oil do you need for 384,000 finished units? You need 3 ounces for each one of those. So for each of those months, we know how much oil we need for production. 3 times produced units. And then there's a different policy for the ending inventory. For oil, we want 25% of next month's production used. So this is based on oil we need for production, not 25% of finished good units. So 25% of the oil needed for those units. All right, and we can do the same math thing here, just adding them up. And then how much do we expect to have on hand? They don't tell you. They can just tell you, we're going to start with this many ounces of oil. But since they didn't, we have to figure what was the planned ending inventory in the prior month. It would have been 25% of the 1,152,000. All right, and then we just subtract what we have on hand for what we need, and we need to go buy that amount. Okay, what would go here? The cushion for August is 25% of the production needs for September. And we can add up the formula, and then the beginning for August is the same as the ending for July. And then we can do the math. Be careful that you subtract out the beginning. You don't need to go buy what you already have. You only need to buy for the difference to get up to what you need. And then Excel is so amazing, I can copy over there. I can't get this cell though, because I would need production for November and I don't have that. So those cells will be grayed out. So now we have purchases in July, which they asked for in units. But then they want purchases in dollars. So what would those units be in dollars? They tell us that each ounce of oil is 20 cents. So those units times 0.2 gives us the dollars, the cost of what we're going to buy. So this is how many ounces we're going to buy. This is the cost of what we're going to buy. All right. But that doesn't tell us when we're going to pay for what we buy. That we'd have to look at the payment structure. What do they say? They say half paid in the current month and half next month. So this $235, half is going to be paid in July and half is going to be paid in August. Let's move to August. That 247,000 number, half of it's going to be paid in August and half of it's going to be paid in September. Now you may notice if you're not a naturally organized person, this would be the chapter to go ahead and be an organized person. You can just for one chapter be organized, and then you can go back to being your natural habits in another chapter, because all of these columns should line up nicely and stay very organized, or else it could quickly become a mess. Okay, that 229,000, half of it is going to be paid in the month where you make the purchase and the other half in the next month, and so forth. We can't do the October, November because we didn't have enough data to even compute the units purchased. And we don't have enough to finish October, but we do have enough to do the 2 months that they asked for, which is nice, and probably they knew that, right? So purchases in dollars for August, that was this one here. So now we have indicated the things that they've asked for, and you're all set.